Today, a new poll finds half of Americans are unhappy with their crypto investments. A court in Singapore reportedly grants access to 3AC's assets. And EnergyWeb CEO Jesse Morris explains how dApps can help companies track carbon emissions. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies rising slightly this morning. By noon Eastern, Bitcoin traded a fraction of a percent higher to $21,000. Ether, meanwhile, jumped to nearly $1,700, and Cardano rose to 46 cents. All right, on to the top stories. First, a new study says nearly half of Americans who have traded crypto are unhappy with the investment. A survey from Pew Research found that of the 16% of U.S. adults with crypto investments, 46% of them felt their crypto performed worse than expected, thanks to the huge sell-off this year. On the flip side, 15% said their investments performed better than expected, while 31% said crypto performed just as they expected. The survey was conducted at the start of July, right as Bitcoin traded around $19,000. Next, a court in Singapore reportedly gave Three Arrows Capital's liquidators permission to see the hedge fund's assets. According to a report from Bloomberg, Singapore will recognize the liquidation order first started in the British Virgin Islands. That decision will let liquidators access 3AC's financial records. Creditors claim the hedge fund owes $2.8 billion after its collapse in May. Last, a new filing reveals Colorado Representative Lauren Boebert failed to disclose crypto trades. The Republican Congresswoman disclosed as much as $80,000 in stocks, crypto, or other assets traded in 2021 in a new filing from a week ago. But Boebert didn't disclose the transactions, which were made by her husband at the time. The Stock Act requires lawmakers in the House to report these kinds of trades within 45 days, but Boebert isn't the only one to flout the rules. Business Insider reported at least 70 lawmakers have recently violated the Stock Act, but that penalties are often waived. Okay, let's turn now to energy. Crypto has garnered a lot of attention for its carbon footprint and energy-intensive mining practices. But what if blockchain technology could be used to track and lower carbon output for businesses? That's the idea behind EnergyWeb, which helps companies build decentralized applications to track and lower their carbon footprint. I spoke to EnergyWeb's CEO about how the technology works and whether it really can lower carbon emissions around the world. All right, Jesse, thank you for joining us today. To start, simply, what is EnergyWeb and what problem are you trying to solve?
Thank you for having me. EnergyWeb Foundation, we're a global nonprofit, and we're focused on building enterprise-grade software solutions that accelerate the energy transition away from coal and natural gas and other fossil fuel-powered energy systems to one based on renewables and efficiency. And we happen to use blockchain and Web3 technology as a core part of our infrastructure.
We know that there is no shortage of companies that are trying to use blockchain technology to fix carbon emissions, for example. How would you say your business is different?
So our business is focused on actually serving some of the world's biggest energy companies to provide them with solutions that accelerate decarbonization. So a couple of different examples. We work extensively with Shell, one of the largest oil and gas companies, to basically give them tools to enable dramatic levels of traceability for where things like renewable energy or where things like green hydrogen actually come from, because currently they don't have tools to support that. On the other side, we've also been in conversation with a number of large financial organizations that are looking to actually get involved in crypto. As I mentioned previously, our company actually uses blockchain technology as a core part of our infrastructure. So we sit at the nexus of sustainability and crypto, which is a really interesting place to be in, considering the black eye, for example, that Bitcoin has gotten due to its very intense energy consumption and, by association, carbon emissions.
So you must be in conversations with a lot of these financial institutions. What's some of the feedback that you're hearing? What are some of the concerns?
About 18 months ago, we started to form a hypothesis, which was that in order for large-scale financial organizations or institutions to begin taking positions in Bitcoin in particular, Bitcoin was going to have to solve its ESG problem, its carbon footprint problem. Luckily, it seems like we have been somewhat vindicated in that. So very recently, we were excited to see BlackRock come out with an announcement that they're launching a Bitcoin private trust, and they flagged specifically an initiative that we launched called Green Proofs for Bitcoin. And that initiative is focused on something pretty simple. We just want to help Bitcoin miners actually prove that they're using renewables. We create tools to make it very simple and verifiable for Bitcoin miners to prove that they're actually using renewable electricity to power their mining operations. And then our intent is to make those tools available to large financial organizations like BlackRock or others to be able to use those tools to construct different products. For example, products that are designed around Bitcoin that is coming from miners who are verifiably renewable. So that's the initiative that we launched some time ago, and we're really excited to see companies like BlackRock come out in support of those initiatives.
Yeah, that was a nice shout out that you got in that BlackRock post from earlier this month. Tell us about that shout out and how you would describe the relationship between EnergyWeb and BlackRock currently.
Speaking frankly, our primary focus on the initiative has been with the Bitcoin miners, because without them at the table, it's worthless. It won't create any kind of impact. So even though we've been briefing not just financial organizations, but also financial regulators about what we're doing, we've primarily been engaged with these Bitcoin miners. So as we speak, we have a small batch of them that we are hoping to actually certify that they are using renewables and to make that certification public in the coming quarter. And then it's our hope that using that milestone as a linchpin, we can actually formally bring some of these other financial organizations into the fold.
Tell me more about the EnergyWeb chain and what exactly you do with it. We saw the token spike some 25% after that BlackRock announcement just a couple weeks ago. Who is holding those tokens and why are those tokens necessary to the business?
So this Green Proofs for Bitcoin initiative is one of several dozen that we have underway, because as I mentioned, our technology stack, which is built on top of the EnergyWeb chain, is focused on decarbonization more broadly, not just the Bitcoin network. Our bread and butter as an organization is working with some of the world's largest utilities, some of the world's largest oil and gas companies like Shell that I mentioned earlier, to actually help them decarbonize. In order to power that, you use EnergyWeb tokens. So basically, this open source infrastructure, it has no license fees like a traditional Web 2 company. But what it is it's being run and operated by a global network of computers, including the computers that are running the EnergyWeb chain. So basically, these different solutions that are powering everything we do, EnergyWeb tokens have to be used to pay the network. So very similar to a lot of other crypto networks. And on that point, the EnergyWeb chain that you asked about, it is a clone of Ethereum, but it doesn't use proof of work consensus. It doesn't even use proof of stake consensus. It uses something called proof of authority. That blockchain is actually run by known energy companies from different markets around the world that are actually powering the blockchain. And with that design, we get deep levels of energy efficiency because there's no mining going on, and an additional level of trust because the network is not being run by a decentralized network of individuals from around the world, but it's being run by individual companies who already perform mission critical functions, which is maintaining the electric grid.
All right, BlackRock is the largest asset manager in the world. How significant is that endorsement for the future of Bitcoin adoption by institutions?
Most of these financial organizations have boards that are taking climate incredibly seriously. And that has all been supercharged by the legislation that was passed just 2 weeks ago, considering the amount of climate policies and investment that was unlocked by the federal government. Organizations like BlackRock will not be able to take positions in Bitcoin unless something like what we're doing is there. They can't invest in new coal power plants. They can't invest in supply chains that are using deeply carbon intense suppliers. And so Bitcoin falls into that same category. And if Bitcoin as an asset class is going to continue to grow, clearly institutional money comes in. So the signaling from BlackRock with that announcement was a massive deal just for the space in general, because it's our opinion that unless these organizations are able to know with certainty and be able to verify that assets like Bitcoin are renewable, they're not going to take positions in them.
Okay, that's all for today, but we'll be back again tomorrow, and we'll see you then.